Welcome to Insights. I'm Eric. I'd like to talk about the NASDAQ 100 here in terms of the evolution of the trade. We can talk about the primary and secondary and tertiary trends. They're no longer in alignment up, and that's why you don't see anything in the name column. There's no phase column notification here. That's largely because the daily trend is down. It's gone down fairly sharply in terms because the price cycle is already above the normal. The time cycle at 11 days is about the average time it spends down. So we could be due for a return or a reset. Some of it's going to depend on how the energy bill behaves during this period. The weekly trend is the only time frame that's showing any type of extension. It's not even statistically significant. The weekly price cycles is 1.3. It's red, but it's not unbelievable. Time cycle slightly above its mean at 46 weeks. The primary trend is not extended in any terms of time or price, even though 26 weeks and 80% seems like a pretty big gain for buying a primary trend flip. In terms of the NASDAQ 100, it really isn't. If we look at the daily bar chart from the NASDAQ, we can see the head and shoulders pattern that everyone's talking about. I know people adhere to traditional TA pattern formations, but I tend to ignore them for myself. I've seen them morph over time. Some of them hold up, some of them change, some of them become unrecognizable. They're easily discarded by whoever talks about them when things don't work out. But I will recognize, and we'll probably be able to recognize inside the reversal tabs where the resistance and support zones are. This is probably a difficult one to penetrate. This gap right here is going to be difficult. I'm sure the computer's picked up on that one as well. So the rally here, if we lose steam and this starts to roll over, it'll probably take towards more the end of the week to notice that. The market itself could be vulnerable again for continuation, and continuation in the daily, which is not super extended in any sense, but it could spill over into the weekly. The daily trends, the computer's graphical representation of the trend is green box is up and unshaded is down, and we can see that the computer still says the downtrend is down. That's why I don't really look at heads and shoulders patterns on this is the daily time frame. I don't use them because the computer filters out that stuff. The real question is are we going to get a thin box, a relatively small one, or are we going to get a deeper one or a deeper set of series of boxes? That probably will be answered by what energy does over the next week or two. Now the daily pro and public index for the NASDAQ 100 provides us a different perspective. Price is here, pro index is here, and public index is here. And we can see the public has been consistent buyers driving things up. They tend to be wrong at inflection points. And what I'm concerned about, and what everyone should be concerned about, and I'm going to create a little arrow here, is the high from here to here, this move. The pro index is already violating this swing low, which is way ahead of price. That suggests a lot of professional selling. Whether or not this continues to go down, we'll have to keep watching it, but as long as it keeps driving downward, it creates a bearish divergence. And I'll show one where we had one in the past. We had the rally was confirmed by the professionals up to about here, and I would say the market, and if I move this, if you move an arrow around about this area and move across, the price index continued to make a new high, but the pro index, while it rallied, failed to get above this swing high here, and ultimately foreshadowed a sharp decline in the 2008 time period. If this continues on and we fail to get even above this swing high or this swing high, it's going to reinforce a negative divergence, which will suggest a lot of professional selling against a lot of public buying. It's a dangerous setup. It warns, it usually is reflected in a return to the breakout point, which is what we've seen, and a lot of times a flushing down below it, which we saw here, which ultimately could be a retest of this breakout point band right in here. So I want to look at the Russell 2000. We also lost leadership in there, even though it's not highlighted in the matrix. The daily impulse is now down. It's recovering a bit, but this is the small cap play is a determination of the domestic economy health. This is a play against growth and value. Right now we're losing both growth and value, and it's really only the large cap Dow Industrial names that are leading. We'll show you that again when I go back to the Trends tab. And that's a bit concerning in terms of types of capital flows that are coming into the United States and what it characterizes the backdrop. It's a more dangerous backdrop than even when the NASDAQ 100 was leading. The NASDAQ 100's diffusion index, which is this form of energy, it has come, as price has come down, it has moved up. There's an oscillation here that moves from a bearish to bullish, bearish energy build to bullish energy build. They tend to be bearish, but not always. In the past, I've shown a few here where they are bearish in a strong primary trend uptrend where the primary trend is not extended. The price can continue to rally, so this is not necessarily a bearish outcome. But we should watch is whether or not the price decline is going to coincide with either a downward drift, which would be distribution, or an upward drift in energy, which would be accumulation. Accumulation would be bullish, distribution or a downward movement would be bearish. So let's head back to the Trends tab. You can see that the NASDAQ 100 itself is not as vulnerable as everyone's making it out. The head and shoulders pattern, which I know people adhere to and swear by, they're not reliable. They have a better than 50-50 chance of, or somewhere 50-50 chance of forecasting anything accurately, and then you might as well just flip a coin. But what is concerning is the misalignment across the 3 time frames. So we are in a consolidation pattern. What I've pointed out in previous reviews and other discussions is the intermarket trend is trying to show a rotation. Yesterday, this was pinned down at the ground until the NASDAQ 100 rallied a lot yesterday. So it's now back above the Dow Industrials, but it's still below zero. The NASDAQ 2000, which is the small cap stocks, is currently leading. But if the Dow Industrials, which is gaining strength, it's difficult to see as it's still pinned on the bottom, but if it gains leadership and moves up this table, it suggests that the big money is hiding in the liquid names. It suggests more of a risk-off environment, and a risk-off environment would be difficult for all assets, including the NASDAQ 100 and anything that's really risk-on. Bitcoin comes to mind and other things. If the Dow Industrials moves up this grade and we lose a couple other things, which I can point them out too. There's the VIX model itself and the sentiment model. If we lose any one of these and enter consolidation, this will probably worsen. So right now it's just a mere correction within a primary and secondary uptrend, and it's still a relatively strong market. Whether it expands outward, we're just going to have to watch and keep an eye on things like, definitely keep an eye on things like the Pro Index. That tends to be leading. Energy tends to be a leading measure. So we'll watch those things as the rally starts to either recover itself and we recover the neckline that everyone said was dangerous. That's really not my line in the sand. The line in the sand is really the direction of the daily impulse. You got to get these two oscillators above the zero line here. You can keep an eye on this stuff in the matrix. Essentially, the way to do that is just to watch. These numbers are in the bear column. They need to flip over into the bull column. That will put a lot of wording back in here and a lot of codes, which will say that the trend has re-entered triple alignment. And that will, the power of triple alignment is, you'll know that right away. Any market that enters a reset has all 3 time frames pushing in the same direction, and it's hard to stop a price advance or decline when that happens. If you have any questions about the NASDAQ 100's evolutionary trade setup or anything that's defines itself within it, that could be energy, it could be the cycles, click the links below in the video and contact me, or leave some comments below that, or subscribe to the channel, subscribe to the matrix so you can follow this yourself. I mean, I'm gonna leave this one open because there's not much to talk about, but it's a good market to go through and good to teach. I would suggest subscribers go this way more and take a look at the seasonality trends and anything else. I haven't put up any coil measurements yet for this one, but I may at some point too. So thanks for watching the video. Enjoy your trading day.